It's Wednesday, March 5th, and you're listening to the Stock Market Daily News Podcast, your source for everything making waves in stocks, trading, and the global financial markets. I'm bringing you the biggest moves from Tuesday's session, plus what's around the corner for investors. Let's get right to the numbers. The S&P 500 closed down nearly 1%, the Dow Jones dropped over 500 points, and the Nasdaq slipped 1.4% as investors reacted to rising tensions in the Middle East. But the real fireworks came from overseas, where Asia's major indexes tumbled and energy prices swung wildly. We'll break down how the U.S. Israel conflict with Iran is shaking global markets, why oil and gas are back in the inflation spotlight, and which stocks are bucking the sell-off with strong dividends and resilient earnings. First up, the global headline everybody's watching. South Korea's stock market suffered its worst single-day drop in history. The Kospi index plunged more than 12% at one point before recovering some ground to end the day down about 10%. The sell-off was so severe that circuit breakers, automatic trading halts, kicked in after losses passed 8%. Fear over widening conflict and the effective shutdown of oil shipping through the Strait of Hormuz hammered South Korean giants like Samsung, SK Hynix, and LG Electronics. Shipping and logistics firms led the declines, with names like HMM and Pan Ocean falling over 16% each. For investors, this is a stark reminder. Global conflict can trigger sharp, unpredictable market moves, especially in economies heavily reliant on foreign energy supplies. Energy prices are front and center. Brent crude oil jumped more than 12% since the start of the conflict, with the benchmark closing well above $70 a barrel. Natural gas prices in Europe and the UK are up over 60%, as nearly 20% of the world's oil and gas flows through the now-blocked Strait of Hormuz. With insurance costs for tankers soaring and hundreds of ships stranded, analysts warn that if these disruptions last, we could see persistent inflation and potential interest rate hikes, affecting businesses and consumer wallets everywhere. U.S. stocks mirrored this risk-off sentiment. The Dow dropped over 500 points, the S&P 500 slid 1.2%, and safe havens like gold and the U.S. dollar rallied. Airlines and transportation companies, which are highly sensitive to fuel prices, fell sharply, while energy producers saw some buying as oil soared. Market observers note this pattern is classic during geopolitical shocks. Investors flee risk and pour cash into assets considered safer. Cryptocurrency markets didn't escape the volatility. Bitcoin briefly pushed above $70,000, but quickly retraced to around $67,600 on Wednesday in Asia. Ether and Solana lost ground, and altcoins remained under pressure as risk aversion rippled through all major asset classes. Analysts say Bitcoin's ability to hold above $63,000 could be a key line to watch if the turmoil drags on. But not everything is red. If you're a long-term investor, reliable dividends are getting fresh attention. Verizon is yielding 5.5%, NextEra Energy is still guiding for annual dividend growth, and Rexford Industrial has hiked payouts for 12 straight years, even as uncertainty clouds the broader market. These kinds of defensive plays may offer some ballast while volatility remains elevated. That does it for our roundup. U.S. stocks closed sharply lower. The S&P 500 lost about 1%, the Dow dropped 500 points, and the Nasdaq gave up almost 400 points as energy and geopolitical risk dominated the session. The big themes? War in the Middle East, spiking oil and gas prices, surging volatility, and a renewed focus on safe havens and dividend strength. Later this week, watch for new U.S. jobs data, more central bank commentary, and key earnings reports to gauge how corporate leaders see the months ahead. For real-time updates and deeper dives, hit subscribe. Stock market news you need in 2 minutes every trading day. Thanks for tuning in.